The 90s are back. Shares of Abercrombie and Fitch up 6% today to $96 a share after the company updated its fourth quarter and full year guidance. The retail story has been, or the retail stock, I should say, has been quite a run since the beginning of last year. Shares up more than 300%. 2023 marking the company's best annual performance since going public in 1996. It even outdid AI darling NVIDIA. Joining me here from the ICR conference in Orlando, Abercrombie Fitch CEO Fran Horowitz. Fran, it's so good to be speaking with you and in person. Thank you.
Yes, well, thank you for having me. Excited to be here.
So you raised fourth quarter guidance today.
We did.
Stronger holiday season than you anticipated. What propelled it?
So it's the culmination, obviously, of a very strong year for Abercrombie. We're thrilled to announce our results this morning. They are honestly the result of lots of hard work over the past several years, focusing on and rebuilding our brands, investments into our technology, rebuilding the company foundationally from top to bottom.
In terms of the state of the consumer, and whether it's looking at the Abercrombie and Fitch brand or the Hollister brand, both of these brands that have gone through very distinct transformations under your tenure, what are you seeing in terms of consumer behaviors?
Yeah, so the consumer always has a choice on where to shop, and what we're seeing is that they're choosing us in both brands. When you get your product, your voice, and your experience aligned, the consumer votes yes, and that's what we're seeing. We're super excited to see he and she responding in both brands across regions and across channels, and it was a win across all for the quarter.
You had such a strong 2023. You're going to have a high bar to hurdle in terms of the comps for 2024. How do you continue to sustain the momentum?
We have to stay close to the customer. That's what we do really, really well. We also were able to get Chase back into our business model this year. That was something in 22 that we hit quite a wall on with all the supply chain issues that were out there. It's really fundamentally how we drive the business. Staying close to that customer, keeping the brands, the product, the voice, the experience aligned is what we do.
Yeah, and you've also, in your third quarter earnings, talked about a 20% reduction in inventory. You're pretty lean and mean. How are you feeling about those levels now? What does it mean in terms of the necessity or maybe lack of necessity to realize discounts?
I'm actually very excited where we are. Chasing that last sale, I think, is the biggest learning that we had coming out of COVID, which is you can do a lot more with a lot less. And I think it took a year like that and a really strong lesson to understand how you can manage your business very differently. That's truly what's helping drive the terrific results that we're seeing this year.
Who are you taking market share from?
I think there's an opportunity for us. Abercrombie particularly, I think there was just a big white space for us when we aged up the consumer and went to this young millennial consumer. There really wasn't a lot of competition in that space, and so we seized the opportunity.
So what does that continue to look like moving forward for Abercrombie? You have women, you have men's, you have the athleisure. What are some of the other initiatives that continue to propel that growth?
So we've done a lot of franchising, to your point. So YPB, our athletic brand, was something that the consumer actually asked us for, and we delivered, and she and he are responding really nicely to it. We also have Best Dressed Guest, which is one of our franchises. We've done a tremendous amount of business this year in our franchising between the NFL and Formula One. So lots of exciting ways to continue to grow all of those opportunities.
How are you feeling about the transformation thus far in Hollister, which is so focused on teens?
Good. That was a lot of work heading into back to school this year. We're happy to see the inflection, and we've seen it across now third quarter and fourth quarter, and we've seen it globally. So I'm excited about where that's headed.
So then what is next? As you execute on this transformation, you've already realized your operating margin targets early. You're actually higher now in terms of the target you just put out today. What continues to propel that? And as you see that grow, what does that mean in terms of a tailwind?
So in June of 2022, to your point, we had an investor day. We came out with our Always Forward plan, which we realized, 2 years ahead of time. The key to that plan, though, was sustainable, profitable growth. And that's really our goal for 2024, is to prove that we can do it again.
If we were to see a recession in 2024, I don't even know if you're baking that into your outlook from a more macro standpoint. What does it mean? How do you prepare for it, or you just don't see it in the cards?
Yeah, I think you always have to prepare for it. You have to have a playbook in the event that happens. But if you keep your inventory lean and you make sure that you're very agile in your supply chain, you can really manage anything that comes your way. I think we've proven that over the last 3 or 4 years with all of the macro instances that we've been managing through.